In 2009, we did a little over 600 real estate transactions, and one by one, Adam, not a bulk, lots of fun.
I see it, same deal, same property, same areas, different eyes that I have to look at them through, different time.
Real estate's simple, it's people and properties. You gotta know your market, you gotta know values, know what makes those values be that way and where the trends are heading. If you can advise someone properly on those things, they're gonna want you around no matter what they're doing. These funds turned the market around in 2012. The guy came, sat down with me and said, "Oh, we're going to buy 300 homes a month." I was like, "Yeah, right." And the rest is history. The prices, as soon as they started buying, started to stabilize. I want them in the marketplace.
When we look back 5-10 years down the road, I think we probably look back at 2026 kind of being like a lost year. We had a huge time of lack of clarity because of what was going on with the housing bill.
Hey, this is Ted and Adam Unleased on Everesi Media. Ted, Ferry, Adam Stern here. We got Eddie Blanco from Stratwell. Eddie, how you doing, man?
Great. It's good to be here with you guys.
Great to have you, Eddie, and great to be back here with you, Adam, as always. I am actually out here in the field today. Had an extended inspection with an inspector and couldn't quite make it back to my home office, so we're doing a in the field recording here today.
It's something that you and Eddie are like accustomed to, I guess, actually being out in the field to facilitate real estate transactions. It's something I'm a little bit unfamiliar with. Like I do most of my work from the office, so it must be fun being out there in the world. Yeah,
that's actually I think how Eddie and I met. We I think it was like 2011, 2012. Eddie, I was working at Arch Bay Capital, the MPL fund, and Eddie was an REO broker, and so I had this job to go to every market where we had major concentration of REO and meet with all of our realtors. And I think that was the first time I met Eddie, was actually on site at a house, one of the houses he was listing for us.
Yeah, that's awesome. It's funny. I've been in single family rental and build for rent and all that like since the very beginning, but I've never actually done REO, and I've always come across REO agents as kind of being a subset of the SFR and build for rent space. So, Eddie, you're squarely in that space, huh?
Yeah, I mean, started in the, as a retail agent back in '98, then got into REO in 2001. And, REO was busy then, but nothing like when 2008 kicked in. And I think in 2009, we did a little over 600 real estate transactions, and one by one, Adam, not a bulk, lots of fun. And
give me the sense of it, because like my arc was like, got into the industry of SFR in like 2010. It went straight up until like interest rates changed. Then it went down, and then volume started ticking up again after COVID. COVID happened. It dipped a little bit. COVID happened. It went off the rails, and then it dipped again after interest rates. So I've kind of been on a upward trajectory with two dips. One has been, COVID slightly, then it took off again, and then interest rates. And then the third dip, I guess, is the whole legislation thing, which caused another dip. But it's been a pretty upward trajectory for me. How's it been for REO? REO was a huge thing, obviously, during the meltdown. But how's it been tracking ever since like 2008, 2009? Has it been on the same trajectory?
No. I mean, definitely ups and downs depending on where the portfolios were and where our client base was. But REO has been on the downtrend I would say since the funds got into the business of buying. So the good thing is that we transitioned from REO disposition to helping some of the funds with acquisition. So that was a pretty seamless transition, and we were doing a lot of acquisitions from like 2012 to 2017, 18. We're heavy into acquisition, and then the pendulum switched back into REO starting to pick back up. So REO was picking up in 2018 through like 2020. But then when COVID hit and all this money got pumped into the market and the moratoriums came, it was SFR started to do dispo again. So we've seen, I've just figured out where the next wave is and tried to ride that wave. But it's been mostly in that institutional owner space.
Eddie, I've known you as a broker, since we met. Really, kind of primarily focus on REO and I guess now institutional dispositions, but probably the biggest focus in retail sales, right? But
we do a lot on the retails for sure. It's a big percentage.
What did
I mean,
you-
still, I would say my institutional is probably 2/3, but a third of it is institutional, just traditional, and that fluxes. But yeah,
What did you do before you became a broker?
nothing. I mean, I graduated high school, got my associates in business administration, and I heard them talking about business administration, and I thought, well, you know a lot about business administration, but you're teaching, so I just want to get in there and do it. So I got my real estate license in '98, and been doing that ever since. That's a long
I
time.
feel good now. I actually had
All
a
these
previous
white
career.
hairs.
I was in title insurance before I was in actual real estate. Like I sold advertising in the real estate magazines they used to see in supermarkets, and then my boss was like, "You sell those advertisements pretty well. You should sell title insurance." So I did that, and it wasn't until like a few years later did the meltdown happen, and I realized like real estate was the place to be. So like I think every broker, and Ted, you're on like the acquisition side. You're in a different spot than we are, but I think what's true for you, Eddie, it's been true for me. It's like in every cycle of the real estate business, every broker in the business has to really figure out where they place in it, right? Are they a traditional broker? Are they an REO broker? Are they doing some specialty in the residential space? Or are they doing something like what I've done, which is kind of focusing on strictly investment sales to the buyers that have the most money, which has been up to date, the institutional investors. Now it's kind of going the other way where institutional money's kind of dried up in a lot of the segments in SFR. Still there in build for rent, but like now I'm faced with the challenge of figuring out where the capital is coming from, and I feel like that's coming from like medium-sized people that are raising private investor capital, even private equity capital at higher rates. So it's like, you know, I was used to selling SFR and build for rent to the big funds, and now I've got to find a kind of a different buyer audience, and getting to know that buyer audience has been super challenging because they look at the same real estate in a very different way. It sounds like you've had kind of the same ride where the market shifted and you kind of figured out how to surf it between REO, retail sales, and institutional sales. Is that right?
That's it. That's pretty much it. I mean, I think real estate's simple. It's people and properties, and you know, it's people meaning the relationships, and understanding what the needs are, and how you can deliver those needs to those people. And real estate, you got to know your market. You got to know values. You got to know what makes those values be that way, and where the trends are heading. And if you can advise someone properly on those things, they're gonna want you around, no matter what they're doing. So, and a lot of the guys that were in REO went to institutional acquisitions and dispositions, and now some of those guys are actually going back the other way into the REO space. So it's interesting to see that.
Plus lending. Everyone seems to be going to lending.
Lending. Yeah, and actually we did.
Yeah, I was just going
to. I forgot to mention that we did help some of the lenders break into the Miami market. When lending was a lot of those SFRs started getting into the rentals, the lending space. I don't know if you remember that spot where Blackstone got it. Yeah, so we helped with some of those get into these markets.
I think it's like a combo of trying to stay ahead of trends, right? And then if you're not staying ahead of it, you know, you have to be reactive. You know, I think there's been many times in my career where we've just had to be a little reactive, and some things you can't forecast. Like in the pandemic, all of a sudden, you know, I think just naturally, you know, the entire economy shuts down, and we have, you know, like massive negative, you know, GDP growth and all this stuff. I think the natural, you know, conclusion there is that things are going to massively slow down, and so we started trying to button everything up and tie everything down. But like all of a sudden, there's a massive demand for homes, and so we became insane sellers. So like we're, you know, taking all of our rental portfolios or any inventory that we had and moving pretty quickly to sell it. And so you know, I think from the acquisition seat, it's, you know, a little bit different. Just I guess we're following capital, but we still have clients, right? And so, you know, the investor is just our client, you know, versus like a retail buyer or seller, right?
And I guess one thing that, Eddie, you might be better at than me, like I've seen a huge uptick in the amount of professional operators selling their portfolios off, right? Like there's more inventory coming on stream from SFR operators. I kind of, you know, look at that as akin to inventory being put on the market from banks, right? And I guess they're kind of being handled in the same way, because with a bank, you need some kind of repair if it's being sold on the retail market, or some kind of disposition if it's being sold on the REO market. With SFR, it's kind of similar because you have a tenant in place, and if they want to dispose of a deal, they either got to kick the tenant out and renovate it and sell it as a retail property, or sell it as a rental property. like, I think my model has kind of hurt me from getting some of that inventory because I generally don't ever want to take a deal unless I know I've got a buyer for it. So I don't think my firm Strata has been at the forefront of every institution's mind when it comes time to liquidate, 5 or 6 or 1,000 properties, because our thing has been like, let me get a deal I know I can sell and we'll take that. Meanwhile, other firms like Entera and firms like that have a systemized way of taking inventory and then sending it out to, retail buyers, REO shops, and every channel you could think of, I think have been the real winners here. Curious, if you're on the REO side, how do you capture some of that business? If you see all these listings come on the market for either like REOs or rentals or whoever, or whoever they're coming from, how do you go out there and position yourself to actually get some of that inventory and make sure some of it flows through your hands?
Yeah, I mean, we it's the relationships, right? Over the years, we have had our niche is really understanding the process, the systems, and we have technology and processes in place so we can handle high volumes of real estate. Do it in an institutional level where the client has that institutional experience, but also offer a retail experience to the consumer, the buyer's agents. The buyer's agents aren't gonna. They don't like going onto an 800 number and having to go through a box that the listing agent wants to make them go through. That doesn't work very well. You need to have a high touch experience for the realtor and the consumer to have high execution. So we deliver on both sides of that, right? Give a high execution retail experience to the buyer and their realtor, but also on the institutional side, give that institutional client the numbers, the data, the information, the speed that they expect from us. So that balance is tricky, but we've figured it out over the years.
Yep. Sounds like you get things figured out with me.
It's super interesting. I mean, because I think Eddie, when we first met, it was really middle of the REO age, and that was such an interesting time for me to really understand how REO worked. Because I always looked at real estate agents, and this is a very ignorant view, but I thought like, an REO agent is kind of like the worst agent because they have to take the REO. But it's actually the opposite. You actually have at least 3 different businesses in the business that you're running being an REO agent. And so just based on what the description you just had, it really that must show a lot on the institutional side, like connecting that institutional seller to the retail buyer.
Yeah, and the institutional sellers, they have problems that they didn't know they were going to have. They have properties with code violations, work without permits, HOAs that are absolutely a pain, and they need someone to help navigate those complexities. So we're doing a lot of sales for some of those for the different funds that are SFRs, and like giving them that retail experience. And some of them are still making some mistakes in my view. Like I don't think they should be cleaning. They shouldn't be doing all the rehab on all the properties. I think we should be touching those properties before they make the decisions on repairs. What it makes sense here? Should we update? Should we paint? Should we, where it makes sense and where it doesn't? In most cases, paint and carpet. Yeah, I'll get it. But if, for example, in Florida, I see brand new carpet, and I'm like, you just spent all this money on carpet. No buyer in South Florida wants carpet. I haven't found anyone that walks in and goes, "Oh, lovely carpet. We love carpet." No one in South Florida likes carpet. I don't know why. It just is not. It's not a thing. So those are little details that you have to know the market and who the buyers are, and so we're able to deliver that. That's what I like about what. And it's fun because as an REO agent, you need to know code. You need to know construction. You know rehab costs. You need to know code violations. You got to have the code enforcement officers on speed dial. So it's interesting. It's a lot of fun.
It's funny. You're almost diametrically opposed to how I deal with a portfolio, where the idea is you don't want to touch any property or at all. You don't want to go to anyone, do anything to anything. Like, what do you own, and how efficiently can you actually sell it to one buyer or a handful of buyers, like in chunks? So
Right.
When it comes to like going inside the property, I've sold thousands of properties. I've walked 5 or 6 in my day.
Right.
Because the idea behind selling a portfolio in bulk is like you get to do it in bulk, and none of that hard work actually comes until after you get it under contract, and all that due diligence about inspecting the properties, making sure that they're to code, and anything that needs to be repaired always happens after.
Yeah.
So it seems like you would have a lot better time of getting all that work done. It seems like less of your deals would fall out actually, because a lot of times when I do a deal, not a lot of things are known before contracts are actually done and inspections are done. So everything that needs to be found out is usually found out during due diligence. And I think I was doing my numbers the other day. I think about something like 65% ended up getting through without a retrade or without a cancellation, and the other 30% got retraded to one extent or another. They didn't like something was broken or needed to be replaced, and there was some kind of retrade, which my sellers hate, but to me, I'm like,
well,
hey,
I think I take offense to that as a buyer, Adam. If you're calling, something's broken, so it actually is a different condition than represented. Is that really a retrade?
Maybe. We call it a retrade. You're right, Ted. It's not a retrade. It's what would you call it? A retrade is like, hey, I know what was broken. I just confirmed it was broken, but now I'm looking to retrade you on price because
that's my diligence process working. I caught a seller who didn't give me the full picture. Which also too. I mean, too, with institutional portfolios, and this is coming up again recently. Like every single existing property portfolio I've walked, there's always things that we bring up that the seller legitimately has no way of knowing about. Because with a rental property, they don't walk their properties every day. That's not what's expected. It's not even allowed, right? And so there's legitimate things that it's not even misrepresentation, but they just don't know about it. And so the condition ends up being different than they represented, right? A price adjustment is warranted there, and I wouldn't call it a retrade. Eddie, what would you call that?
I get Adam. I understand where you both are coming from. Because some people, use a little extra information that they didn't have before to over adjust value request, and so I would play that as a retrade. Well, it's a fair deal. Like, oh, I didn't know this one roof was an issue, and I want to credit for that roof. Okay, credit for that roof. But sometimes they use that little extra information to be like, oh, wait a second, now I can't pay that. I got to drop the price by some ridiculous amount, and then I call that a retrade. So it depends on the buyer in the property situation as to what I would call it. But I think that's semantics, and I do want to address what you said, Adam. What you do is is a different approach, but it adds a lot of value, right? To move a bunch of properties in one shot to one buyer is valuable to a person who, as opposed to, as a client, out of respect for them, I'm not going to say who they were, but a large institutional fund, called us. They had gone under contract. During the due diligence, it fell out. They had about 300 homes in South Florida. They wanted to exit South Florida, and we started analyzing the portfolio, and we sold off that portfolio for them one by one. Mm-hmm. And on some, they hit home runs. On some, they were problem properties, and we did okay with them. But at the end, and some we were able to fix and get top dollar for. In the end, they were super thrilled that they got the top dollar, but it cost them time, and and there's a trade-off: time for money. And depending on the client and the needs, different strategies work for different clients. So what you do brings a lot of value. What we do brings a lot of value. It's just a different approach. And it'd be interesting to see how we could talk about how do we do the best for both clients, or even the portfolio.
Yeah, I think we probably work on, maybe not our firms particularly, but I know that my option is either option one and your option is option two, or mine is two and yours is one. But I'm seeing more and more deals from institutional investors, or I shouldn't say that, operators that own properties professionally, whether or not they're backed by institutional capital or private equity capital, or private capital is kind of immaterial, but they own and manage properties. A lot of them come to me as the first call, or they go to another broker to sell it as a portfolio, as a package. And my conversation with them is always, all right, if you want to sell it as a package, here's what cap rate makes sense, and here's the discount you likely have to take in order to sell it as a package. And there's trade-offs, right? It's easier to sell it as a package, but like the trade-off is you're going to take a discount. And the other trade-off is, like, my way of looking at it is we have to basically package it up with everything that you know about the property and be as transparent as possible about what the actual portfolio is, so that we can get it in front of someone, have them underwrite it, and have a leg to stand on after due diligence is done, where if they want to retrade it or reprice it or ask for X, Y, and Z, we have some kind of standing to say, hey, we told you about the CapEx. It should have fallen into this price to that price. So that's already been spoken to. So you can't retrade us or whatever. The trade-off between what we do in bulk and what you do individually is like the preciseness that you're able to operate under, knowing every property, every market, every nuance of every property, so you can make a retail sale happen more easily. I can't do any of that. I got to look at it as a whole and think, how do I describe this as well as I can and give us a leg to stand on in case we get under contract and things start going sideways. And that the trade-off is if my deal goes bad, it takes 60 days to get to a massive cancellation where we're canceling millions of dollars of real estate. If yours goes bad, Eddie, you're closing up, you're losing a property worth $200,000 or $300,000. So it's like, a letdown for both of us, but mine's just a bigger letdown over the same period of time. Ted, give me your thoughts, man.
I think, but what both of you guys do is needed, right? I mean, when I've done analysis, I mean, we obviously look at things from an acquisitions perspective, but also from a disposition perspective also. And I think it's rare that an entire portfolio is like best suited entirely for retail or best suited for a portfolio sale. I mean, because, unless it's just a straight BTR deal, which, is pretty homogeneous and it's going to kind of trade like multifamily. But on existing scattered product, you're undoubtedly going to have some neighborhoods that appreciated better than others. So those neighborhoods that appreciated better than others are going to have a higher value. You're not going to get what you want from a cap rate perspective. Whereas like the rest, there's not going to be that much difference between the cap rate, pricing versus the retail pricing. And so you might as well, Eddie, to your point, sell it bulk and save the time, right?
Yeah, well, what I was suggesting was that there's an interesting approach that we haven't talked about, which is look at the portfolio and say, hey, look, these can sell really well with cap rate, but these cap rate's not going to sell, but it's a strong market for retail buyer. And let's retail these and bulk sale these. And I don't know if that's even a thing, but it'd be interesting to do a study and figure that out.
I end up actually having that be the case. Like I get portfolios all the time. Like some of the properties just don't work, but I keep them in there anyway and I price them individually. So like I sell off all the stuff that works as rentals, and what's left over after all that stuff is sifted through, or all the properties that just don't work as rentals because they're priced too high and the rents are too low. And they usually go to the retail market with those anyway. So.
There you go. Interesting.
I think we're seeing the emergence of a new business channel here. Eddie and Adam working together.
Can you figure out how to do your business in a market wherever we get a portfolio? Because if you could figure that out, we got something to talk about. Like I might have a portfolio in Miami one day and one in Bentonville, Arkansas the next day, and one in Indianapolis, Ohio the next day. That's my challenge. I have to go so wide because my buyers they'll buy anywhere as long as they can get yield. So as long as you can list the property for retail in Miami and do the same thing in Wichita, Kansas, I'm on board, man. We'll figure out how to do it.
Yeah, I know I can do that throughout most of Florida, but I don't know about Wichita, Kansas. But
I need Wichita, man. That's it. I can't do Wichita. I'm out.
Yeah,
I don't know.
Yeah. I get you.
Kidding, man.
So I mean, you guys are both really active in selling for institutions. Have you seen a difference in volume kind of before or after this housing bill kind of slow down?
Yeah, I mean, the housing bill slowed down. I would say I noticed an acceleration in disposition, not acquisition that already stopped, because we're in Miami and I haven't seen new acquisition in Miami in a while. Not in any significant way from any of these big funds, because the numbers just didn't seem to work. So I would say I saw an acceleration in disposition, and most of it was, except for that one client that did a whole like get out of the market move. Most of them have been like trying to create efficiencies in management by, get rid of the houses with pools. Selling houses that needed high CapEx and it didn't make any sense. They had done well on the portfolio, that property. Let's get rid of it rather than dump another cost of a roof and a new kitchen remodel and all that CapEx. Let's just go ahead and sell it. And so there's been that kind of sell, not like a sell off. Oh my God, the market's going to tank.
Yeah, it's funny. I always kind of like pay attention to the words people use, because when people ask me, like, have I seen a change in institutional activity? like I look at the market through the prism of you have where the capital comes from. That's either institutions or private equity or high net worth individuals or family offices. And then you have like the operators that take that money and actually buy real estate, operate real estate, or sell real estate. So regardless of who they're getting their capital from, like operators need to make money. They're there to operate real estate, whether it's multifamily, single family, built for rent, whatever. They're always in the market. They always want to do deals because that's their business. I feel like institutional capital essentially went off a cliff, and decreased. Just the money coming into those operators decreased because interest rates went up and it decreased, and then the whole legislation thing came about and it further decreased. So I feel like I know all of my operators are trying to figure out where they're getting their capital from and what they can buy with that capital. And while they're doing that, they're trying to figure out if their investors want their money back, and if those investors do want their money back, which a lot of them do, they go into disposition mode. So, the more volatility that I see, the more activity I see from operators, not necessarily in a way that benefits me, but certainly more active. Like if institutional capital wants their money back, well, dispositions are going to go, through the roof. If money is coming in through private equity capital, private investors, whoever, well, then acquisitions are going to go through the roof. What's happened in my business is like all the institutional capital that we're buying at 5.5 caps, like brand new property that need no capex, that money went away. So the operators were like, okay, what do we do now? Now I'm seeing more and more funds coming to the table with a value add strategy, or with a strategy to buy distressed assets from builders, or workforce housing strategy. And for me, it's like, great, the operators are still there. They're still doing their thing. I need to figure out how to go and feed these guys the kind of inventory that they want, or figure out how to sell their inventory to my existing buyers. So to answer your question in a long-winded way, like the operators in my world are always super busy. They want to stay busy. Whether the capital is there and where it's coming from is how that activity is dictated at the end of the day.
Right. Well, and I think we're almost kind of back to where we were at the end of last year, where it's still, we're kind of back to figuring things out. I think when we look back, in 5-10 years down the road, I think we probably look back at 2026 and kind of being like a lost year. I mean, we had a huge time of lack of clarity because of what was going on with the housing bill. But now the housing bill it's passed. And I kind of look at, my takeaway for what it really meant for institutions is that end of the day, it just kind of meant, it basically just ended up blocking them from buying one-off homes on the MLS. The rest is kind of unchanged, but then you overlay, we have a new Fed chair, and, they've held rates steady, but now I saw some things coming out that Warsh, the new Fed chair, is talking about actually raising rates again. And so it's, I think what the things that were starting to become more clear, and we started to have some things like maybe rates were going to come down a little bit, at the end of last year and be able to buy again. It kind of seems like we're back to this point, is like we got to figure out how to move forward. And
it passed, right? But the law passed, but still the rule writing hasn't gotten through. And from my understanding, so the rule now that when legislation passes, it goes to the appropriate departments that the legislation designates to do the rule writing. And that part isn't clear yet from my understanding, unless you know something different. And that still creates a little bit of a gray area, like exactly how, what are all these definitions and how is that executed? And those definitions still haven't been, so that could still create some level of pause. Although there's a lot more clarity, there's still some gray area that we're not sure about.
Well, no, that's a really astute point. And, we've talked about compliance, Adam, on like the new compliance requirements that'll come out as a result of the bill passing. But I think that, to your point, Eddie, just because the legislation has passed, we don't know how it's going to get put into effect. Right. And that's really where, I guess the rubber meets the road. I look at it, and aside from us being in the industry and just knowing who owns 350 properties or more or not, how is somebody coming from outside the industry even going to be able to track how many properties people own?
Yeah. Well, funny, Eddie, you're a broker. Maybe you can relate to this. I listen to Ted and everyone talk about these macroeconomic factors, the legislation and all that. And then I go back to doing my business, and some weeks and months and quarters are really freaking awesome, regardless of what's happening with the legislation or the wars or anything else, because in my world, it's like if I can find a little sliver of people that have demand and have somehow access to some inventory those people want to buy, I'm a useful guy. And it's like when things aren't going great and I can't make those matches and I can't make those buyers meet those sellers in my world, I start pointing to the macro and I'm like, yeah, that's why. Because of the legislation and all that, all that like high level macro stuff kind of comes into play. And I think maybe that's the reason. And then I meet a group of buyers again that have a really good buy box versus people that I know, and I go back to doing deals.
That's why I said it, earlier on. I said it's people and properties, right? So I either I'm dealing with the wrong people or the wrong properties, but I got to find the match between the people and the properties.
Yeah.
That's our game every day. Yeah. And
I wonder, Eddie, since you're another broker here, and I don't get a chance to talk to brokers very often. A lot of times we're on the podcast with people that are more in Ted's position or running big companies or running big acquisition programs. But do you see the same thing that I do, where it's like the macro can be going wrong, or there can be things that are working against you, but your micro world could be running just fine, right?
Yeah.
Because you found a sliver of business or the right buyer or the right seller to work with. And you ever kind of wonder, like, does the macro even matter a lot of times? Or is it all about just who you know and who knows you, right?
I try to have that mindset, because otherwise I'm going to sit back and, blame it on the macro and micro. It doesn't matter. I got to pick up the phone, send emails, connect with people, go to conferences, have conversations, and figure it out. That's my job. That's my primary job every day.
And Ted, you're not in too much of a different position. I mean, we're doing a deal right now where you're buying 40, 45 townhomes, from a seller that I know. We're doing that deal just fine, no matter what's happening on the macro level. You kind of got to think the same way, no matter what's happening nationwide or globally. You still got deals to buy and deals to sell. How much of that macro ends up finding its way into your world as a deterrent or a positive, wind?
Yeah, I think in what we do, we have the one very direct path that always affects us is just where interest rates are. So, that's going to control how much we can pay, or not pay for a property. So I'd say that's one macro factor that always plays comes into play. But on the flip side, with a longer term fund that's been out there, and we've kind of been in this case where, we're buying for a fund like that, through the rising interest rate environment. They were just kicking off with their first fund when rates rose. So everybody else is shut down. So it was kind of like, it was like wide open for us to go buy a ton of stuff, but they were very prudent and they tightened the screws on us, right? And so, we kind of ended up in the spot where, even though there wasn't much competition, we're still, my term for the period is like, we were just constantly like scraping the froth off the top of the market. I think we were able to do that because there wasn't a lot of other volume, happening. But I think to your point, my version of probably, Eddie's picking up the phone or Adam, you just find the portfolio seller in your kind of micro world is we're, after being in the industry for so many years, that people just send me deals all the time. And so it's like, it's really kind of like the eyes at which I view that portfolio. Is it, if interest rates are low, then I'm probably going to be looking more towards institutions to try to place a deal versus, if it's, we're starting to see, I don't want to say it's a lot of distress right now, but we're seeing some distress where we might see more discounted opportunities. So we're looking at the purchase less in terms of cap rate and more just in terms of discount to market value, and which is less dependent upon interest rates, right? Yeah,
I can relate about what you said about like, the eyes through which you see a deal. Like if it was 2017 and I saw like a package of 45 homes in Atlanta, Georgia that were all 1980s built, I'd had dollar signs in my face. I'm like, okay, cool. I'm going to sell this right now because there are like 9 buyers out there. They're ready to buy it. I see that same portfolio today and I'm like, I don't know who to sell this to unless I can get this thing to be financeable to a 1.45 DSCR and it could take a 14 or 15% discount. And like, I see same deal, same property, same areas, different eyes that I have to look at them through, right? Different time.
For sure. Hey, so Eddie, you've had some leadership roles with, I think it's the South Florida board of realtors, and I think you may have even been involved with NAR at one point. But
Yeah.
having that, having served those roles, how do the realtors in general view this housing bill and what the effect it's going to have on their businesses?
It's interesting. I remember in some of the rooms hearing people saying that they wanted us as the Realtor Association to lobby to include some of this language to curtail some of the SFR buyers. They're taking all the inventory, that kind of narrative. I'm not a fan of that narrative. I don't think that the SFRs are the reason why there's less inventory on the market. I think the reason why people have less homes. By the way, the whole inventory, I'm not a big fan of the inventory is lacking. You'll see the reports from NAR and Realtor.com that say inventory is lacking. Yes, inventory of affordable on MLS properties is down. But when you look at housing units and people that need housing, we're nowhere. We're pretty much at par where we've been for years, except for that little glitch in 2008 where we oversupplied the market for a bit. So I'm not a big fan of the whole we're oversupplied to the market. In fact, if you looked at the West Coast of Florida, there was just some reports of inventory being through the roof right now. I think what happened was just way too much capital came to the market year after year after year after year, and has absorbed this property. Is not ready to let go of those assets, because where else are they going to put the money? But as soon as another opportunity comes, I don't see why money wouldn't move from real estate to some other asset class. And then so I'm on that fence of I don't like it. I know that personally as a realtor, I don't like this legislation because it's anti-competitive. It's taking people out of the marketplace. These funds turned the market around in 2012. I mean, I remember they were in Phoenix and they came here to Miami, and the guy sat down with me and said, "Oh, we're going to buy 300 homes a month." I was like, "Yeah, right. If you are going to buy 300 homes a month, I could help you find them." And the rest is history. But I mean, the prices, as soon as they started buying, started to stabilize and started to pick back up. I want them in the marketplace. Well, last thing we want is a big REO inventory increase, and these institutions can't buy it. Who else is going to buy it? So I'm on that camp.
But that's a little bit, stemming from what Eddie's talking about, kind of movement of capital. And, we've been talking about it a little bit here, is that, I think that for a long time, like coming out of the downturn, you had, it was really all equity, right? The debt market got destroyed, and it was very tough. It's so funny. It's very different from it is now, how it is now. When, I was building this portfolio for the family office in 2013, and we were trying to get loans. We were trying to figure out what type of financing we were going to be able to get on the portfolio that we were buying, and there was nobody out there. I mean, it was Colony, which then became Corvest, but Colony was putting out term sheets. We're negotiating, I think, what ended up being their kind of like template, term sheet back in the early days. BTR, which was Blackstone originally had some stuff, but it was tough to get debt. And then all of a sudden that flipped because interest rates rose. That shrunk down the desire of equity to be there, but then it increased the yield for the debt providers, right? And then all of a sudden it's good to be a borrower, right? Because there's so much competition, because there's so much capital going into private credit, and because of that competition level, we're starting to see some distress, or we've seen distress in that private credit. With interest rates rising even more, I fear a little bit that investor capital is going to continue to push into private credit, and that could, because of that competition it causes, lenders stretching on the dollars they're putting out a little bit, that could ultimately lead into some larger distress.
Well, it's not only that Ted, it's not only that, what's happening is that when you've seen the type of debt they're doing at debt service coverage ratio loans of 1 or below 1, it boggles my mind as an operator myself. I don't understand how you can do that sustainably. Maybe if you're a big fund, but if you're an Uber driver and and that's the thing, 80 some odd percent of the properties are owned by people that own 10 or less homes. A lot of these guys are buying that debt service coverage ratio loan, getting that type of debt without really understanding that you have vacancies, you have management costs, you have a roof that goes bad before you knew it was supposed to, the AC that fails. And if you don't have the capital to sustain it, you're going to end up in a default situation. And we're seeing quite a bit of investors hurting right now.
I see it all over the place too. I always wonder if there's a bank out there willing to lend to a private investor that's going to buy one property at a 1% DSCR, which means they just barely covering their debt payment, and they're requiring 30% down. Is it Machiavellian? Is the bank just expecting them to default eventually, where they're getting the property at a 30% discount?
I was just going to say, who? Well, first off, who's purchasing a 1% DSCR house today, right? I understand refining it, but who's buying that house, and who in the right mind would make that loan today? It doesn't make sense. I understand coming out of a rising interest rate environment where you had to, and there was a lot of kind of the discount. I forget the name of it, but they're the OID loans, right? Where they're funding lower than the principal balance, to keep the cash low, but you still have to pay that balance at the end.
Yeah.
I mean, those types of products I think it was a smart solution. I don't know how much they really work, but it was a smart solution coming out of the rising interest rate environment to keep people in loans.
Yes.
But a new purchase at a 1% DSCR today is I don't, that doesn't make sense to me.
It's happening.
Yeah.
It's happening.
Yeah.
I know it's happening, and I see it happening quite a bit.
It's kind of like the investor version of the subprime mortgage, right?
They're
it's
buying
a financing vehicle that no one should take, but just too attractive not to. So they do, and it creates all this. It's going to create all this distress later on.
They're buying the REOs. They're buying these REOs that I'm seeing, because I see I see the closing statements. I see the mortgage documents, and I'm like, wow, there goes another one. So it's
maybe it'll be
interesting.
good times for you in the next year or so with more REOs. So we'll have more inventory to sell.
Yeah.
Thanks for joining us today, Eddie. We've known each other for a long time. Always great to get your perspective and slightly contrarian view on some kind of straightforward concepts, or things that I think are straightforward concepts in the market. But thanks for joining us on Ted and Adam Unleased on Everresi Media.
Thank you. Been a pleasure.
Well, cool, Eddie. It's been awesome, man. I appreciate the fact I'm on the podcast with another broker. I get lonely here sometimes, think I'm the only broker in the world, and it's nice to know there are others out there just like me.
I'm a phone call away. Enjoy your trip.
You got it, man. All right. See you later.
Take care. Be well.